Market Musings podcast with Fairbairn and Russell. Well, hello and welcome to the Market Musings podcast here from Stopbox, where today we're talking to Malcolm Palle, the chairman there of Coinsilium. It's good to be talking to Malcolm, and we've got Alan Green is co-hosting for Stopbox as well. So welcome both of you. Alan, it's nice to be having you co-hosting this podcast with me for the first time. How are you?
I'm very good, thanks, Mark. Yep, had a very good weekend. Went to Master Investor. I think I told you when we recorded the podcast last week, and it was a very informative show. But that show has certainly evolved. It's changed from a show which was a platform for small companies to a show for service providers reaching retail investors. So interesting to watch that evolution take place. But hello, Malcolm. How are you?
Hi, Alan. Hi, Mark. Nice to be with you both.
Yes, indeed. How are you? How are things?
Yeah, good. Very good. It's obviously it's a seminal moment. Literally today is the day we're speaking on Monday, the 11th of March, when Bitcoin broke through its previous all-time high, which was something that we've been I'm going to say we've been planning as if we orchestrated it, but we've been looking to happen for a long time. And so it's very, very significant because it's the kind of driver for our industry. It's the it's the benchmark, and everything crypto follows the Bitcoin.
Yes, indeed. So I mean, 72,000 today. Is that what it's? So it's all-time highs.
Yeah, we were sort of knocking around the previous all-time high, which was just under 70,000 for quite a while, and it was struggling to break through. But this morning, it did break through the 69,500, and we were looking for, this. I mean, since we're still going through the day, the most important thing is the close. Although, even though the markets don't close for crypto, but there is a notional close, and if it closes meaningfully above 70,000, then I think we're off to the races, as they would say.
But what's driving it then, do you think, Malcolm? I mean, is it part of a wider market move? I mean, we've got the S&P 500 making human history all-time highs. The Dow Jones did it a few months ago. The Nasdaq did it again a few weeks ago. But of course, we've got gold at all-time highs, 21.80 today. That's very strange. I haven't looked at the US dollar. I'm not sure what the US dollar is doing, but an election year, what is it? What's driving this? So is it the halvings coming up? Of course, I know that would be encouraging Bitcoin, but from your perch, what are you seeing? Because I know you've got your eye on the broader market as well as the crypto market.
Yeah, it's a combination of factors. I'd like to say it's a perfect storm. I think it is actually, but perfect in some respects, not so good in overall terms for the fate of the US dollar and debt around the world, and all the things that sort of give people cause to look for uncorrelated assets, which Bitcoin is most definitely proving itself to be. And that's one of the areas which it's been sort of testing people's conviction, because a lot of people have formed the view and have maintained the view that Bitcoin is not kind of to be considered as a store of value. But I think that what's happening, the main reason for that was because of the volatility. I don't think the volatility would go away, but it is becoming more and more considered as digital gold. And that was the view that people in the industry have maintained. I think the introduction, if you're looking for reasons for this, you've got the backdrop of the global economic and geopolitical sort of environment, which is not getting any better. Traditionally, people would go into gold, but as we've seen, gold has struggled up till very recently, and there's lots of people have very different views as to why it struggled. And the most vociferous critics would say it's a manipulated market with the LBMA and trading. I don't know what the percentage, or at one time I think it was 200 to 1 paper gold against actual deliverable. But of course, that's a market that is easier to manipulate than the Bitcoin market. I'm not saying the Bitcoin market isn't manipulatable, but it's not in the same way because it is transparent ledger. But I think that we consider it, and it's becoming more apparent that it is performing as digital gold with less ability to control it. So that's the one factor. Then we've had the introduction of the ETFs, exchange traded funds in January, which broadened the market by probably I think the conjecture was that there was about 5% of the world had exposure to Bitcoin before the ETFs came out, and the ETFs opened the market to pretty much anyone. Certainly in the US, has got a stockbroking account can buy an ETF, which is a regulated product, and it's transparent in the sense that every morning they have to declare their holding, and you can see how much Bitcoin is backing each ETF. So that's an important factor, and that's a huge market, which I've got some notes which I'm going to go through later on.
Well,
and
that
then
almost validates it, doesn't it, as less of a riskier asset, because you've got like BlackRock doing an ETF, and obviously everyone knows BlackRock, so it does, in a sense, de-risk that, gives it some credibility that actually, the big boys are going for this and giving their clients access to it.
I think BlackRock, I don't think they're doing it for altruistic reasons. They're doing it because they can see some money there, and they've got clients. They've got 10 trillion assets under management of their own account, but they also have the ability to actually put ETFs together. They're a behemoth. And that's right. It does give it, in the eyes of investors, some more credibility. But I was going to mention as well, we've got the halving coming up, which is when the supply of Bitcoin reduces by half, which is expected about the 17th of April. So all this is great for the broader crypto markets because it creates the tailwind. I would argue that no other crypto is like Bitcoin. I think that you've got a sort of a running mate of Ethereum, which has got probably the most use, and then you've got various other types of crypto, those that what we refer to as layer ones, which are the sort of the fundamental infrastructure level of blockchain, and then you've got layer twos and layer threes, you've got NFTs, you've got AI plays, you've got all sorts of different types of crypto, just as you've got lots of different stocks in that make up a stock market. So this whole climate switches on, and we're sort of in crypto spring. Still not summer yet, and certainly not autumn, which is when they tend to blow off. But it's a great place to be, and from our point of view, this is when we've been doing a lot of work in the background, gearing ourselves up to be ready, and now I think we can sort of start reaping the rewards.
So, a question for you, just very quickly: would you rather hold gold or Bitcoin?
I hold both. And that's sacrilege for a lot of Bitcoin crypto people. But I've always, gold got me into Bitcoin.
Yeah.
I got into gold in 2005.
Okay.
And I still have junior miners, which I hold. I'm long suffering, but I don't really suffer over it. So, but the point is that I had a view with the last interview I did where I said that, I think that once Bitcoin starts moving, it's going to take everything with it, and gold included, which it is now doing, because that happens in the small cap world as well, doesn't it? When you start seeing a share go up, and then everyone's made a bit of money on it, and they say, okay, what else can I put my money in? And gold will follow. I don't think it'll lead this round, but price wise it will follow. But then again, the market cap of gold is about 13 trillion or something like that, and the market cap of Bitcoin is knocking on, it's less than 2 trillion, so it's still got a way to go.
Just to say, Malcolm, we were saying before we came on air, interesting to see the fact that now the institutions are getting involved, and we're seeing more liquidity on the back of that, but there's still a general reluctance on behalf of institutions to really take the plunge. And when you consider
in Bitcoin.
In Bitcoin, and when you consider Bitcoin itself, it has been such a wonderful asset for people, and the younger generation that haven't really got involved in investing in any way, shape, or form. They've got involved in Bitcoin, and I have friends of my sons who bought Bitcoin and made some decent money, and they really appreciate the return. And yet we're seeing this reluctance on behalf still of some institutions to get involved. Why do you think that is?
Oh, I think that sort of it's more simple. It's like Occam's razor. The most obvious answer is the right one. And I think with this is that as we get older, we get more cynical, and we sort of think kids generally make mistakes. They're not right, but in the and as something new comes along, it's a fad, and it always has been. But this is the first time, I think, in our generation and pretty much in our lifetimes, that a new asset class has been born from nowhere. This is something that is, this time it's different, and it is different, and it's very hard for experienced professional funds to actually look at something that's come from the ground up, from the grassroots, and actually take it seriously. Because even you look at the GameStop kind of plays, this was an example of experienced people, investors, sort of institutional investors, whatever they are, family offices or funds, treating retail investors with a bit of contempt, and the retail investors all ganged up and then turned them over, and that was what sort of gave them a bit of fire in their belly to actually to prove the big players wrong. So I think what the main reason, I think, is because they just didn't get it, and also not just didn't get it, but they didn't bother to get it, because they just dismissed it. And I was just explaining before, I spent the weekend in Malaga, which I live in Gibraltar, just down the road. There's a couple of fund managers there, and they have no intention of getting involved anytime soon. One of them wanted to have an Oxford debate, which is where I argue their side, they argue my side at some point, which is fine, because he asked me how could Bitcoin fail, and I know full well how it can fail. It's not you can't say everything is guaranteed. It would, but on balance, I don't think any of the reasons we thought of were realistic, and they certainly weren't the things that they were thinking of, like the network gets hacked, which it hasn't been hacked since it started. Custodians get hacked, but the network didn't. And likewise, it was just there's enough people. At one time, I would have thought, it's a pity, because we need these investors in, we need these family offices, we need more people to buying Bitcoin. But the reality is we don't, because I just want to run through some figures. Each time Bitcoin collapses, it comes back a bit stronger. And it's almost trebled it's actually, I think, more than trebled in the last 12 months. It's up over 60% since the start of 2024. And it's still rising. And the stuff that's happening with the ETFs, you can't underestimate it. So as of Friday, the total number of ETFs, a Bitcoin in ETFs, was 800,956. This is quoted from another source, so please, that's my disclaimer. Errors and omissions. What's the term? I don't know. Whatever it is, please forgive me if I'm mistaken.
Errors and omissions included.
That's it. Yeah. So that's an increase of 181,000, or nearly 182,000, since the launch of the ETFs. And there's been 21 trading days since their launch in January, which means ETFs are acquiring about an average of 4,400 Bitcoin a day. That's the run. That's the running sort of accumulation. Now, the current mine supply, which is what the miners get in reward, is 900 Bitcoin a day. So there's already more than 4 times mine supply being accumulated by ETFs every day. And at the halving, which is estimated to be around 17th of April, that supply goes down to 450 a day. from 900 to 450. And if the Bitcoin acquisitions into ETFs carries on at 4,400, then that's only 10% of new Bitcoin coming onto the market. The rest of it's got to come from somewhere else. Now, at today's value, that's probably Friday's value. That was a 360 million a day that's going into Bitcoin. And so you can see, what direction that's going in. There's only about 28 trading sessions left till the halving on the 17th of April. So this quote is that means the ETFs are on pace to control about 125,000 more Bitcoin than they already do. And if this continues, that's at this rip, then the price is going to keep rising. But the other factor, which is really interesting, is what's in BlackRock, because there's about, say, 10 billion has been put into ETFs in the first 8 weeks, and over the course of the year, reckoned by the end of the year there'll be about 920,000 Bitcoin out of 21 million. So coming up 5% will be in the ETFs by the end of the year. So the game's completely changed. That's the key, and that's an insatiable demand. So say 4,000 Bitcoin a day, and that's likely to be, that's 10 times the supply. And you've got, say, BlackRock, which has got 10 trillion assets under management, and that's nothing to do with their ETFs. That's what they have under management. And if they decide that they're going to, as an allocation suggest or recommend to their investors, or even discretionarily put 1% of that 10 trillion, sorry, they've got 10 trillion under management, assets under management. If they decide 1% of that is going into Bitcoin, that's $100 billion. So you can see the drive and the momentum of this, and why we're sort of going where we are. Yeah. And I think now we're through the all-time high. It's really, this guy was saying that should be 40 trading sessions. Will be within 40 trading sessions. Will be within sight of $100,000.
Okay, and that ties in there. You're saying if they put 1% of their available capital into Bitcoin,
asset under management.
Asset under the management. Yeah, you can see how that correlates into the size. You alluded earlier about the size of the gold, market versus what the potential is in the BTC market. Do the ETFs? They're buying. They're not mining. They're buying Bitcoin. Is that how it works?
Well, the miners mine. They sell their. Depending on what they want to do with it, they might want to hoard it, they might want to sell it. I would suggest at these prices they might be starting to sell some of them, but there's not nearly enough Bitcoin available to satisfy the demand.
Right. Yeah. Okay. Yeah. So BlackRock acquiring Bitcoin, and then that goes as part of their fund.
They may have shares in some miners as well. There's a lot of the big miners that are going up. I mean, that's a scale game. That's not a place for small fry.
And and that is a scale game, because I think gone are the days where me and you could do it in our spare rooms.
No, these are multi-billion-dollar companies that are doing mining in a meaningful way.
Yeah.
And that game is going to get twice as hard after the halving.
Yeah, so it becomes twice as hard to mine it. Twice as much energy. It becomes twice as much compute power. So I mean, okay, it's too late to get involved in mining. We're long, individuals were long past that. But it's not too late then, in your opinion, to speculate on the price of Bitcoin? All-time highs. You've got to buy when it feels like. But you told me this. You've got to buy when it feels like swallowing broken glass. That was a while ago.
Yeah, that's what I was doing. Yeah,
you were buying.
I've got the sore throat to prove it. We did that. We held throughout as much as we could and as much as we can. We still got, Coinsilium's got a treasury. It's got Bitcoin in its treasury. And we just closed the financing last Friday. We announced it Friday, closed it Thursday, late Thursday. And the whole point of that is that, we earn crypto through our advisory work, and we have a treasury of crypto that we've held, and that's like the family silver. So, one of the reasons why, I mean, the main reason we wanted to raise money was because we want to make some more investments, and we didn't want to sell our crypto or more than we need to actually, you want to hold on to this at this stage. It's the last thing you want to do now, until it gets to the point where you think, okay, it's going to blow off. But that's one of the other reasons as well. So it's cash management as well, and of course, if you can buy it at the low point, it's not easy. I mean, it really isn't easy to buy, and it's also very speculative because you don't know how low it's going to go. That's the thing. It's balls of emotion. That's what it is. But yeah, we're very, very positive at this point. I think there's enough demand, as I mentioned before. I think
Okay.
it is a perfect storm.
Yeah.
Yeah.
Go on, Alan.
Yeah. Just kind of moving on a bit from that, Malcolm. Of course, Bitcoin is the epitomization of tokenization of currency, as it were. We're seeing now, and I've had a number of meetings in the city this year with companies moving into tokenization. We're seeing carbon credits effectively backed by blockchain. We're seeing other asset classes being tokenized. From where you're sitting with Coinsilium, how does that marketplace, or how does the evolution in that marketplace look to you?
It's interesting. It's certainly a good one of the original use cases for the technology. I think people sort of looked at this and said, well, you can pretty much do anything with blockchain. You can tokenize securities in a company, and what you can do with those is unbelievable. You can put smart contracts in there, and you can have this whole way of democratizing shareholders. The main thing about we refer to RWA, real world assets, but it's not limited to stocks. It could be commodities, as you say. I think it wouldn't surprise me, the carbon credits. We've recently announced an advisory agreement where partnership with a very large entity, trade finance entity, that's regulated in Singapore and Hong Kong. Their subsidiary is creating a way of tokenizing trade finance plays, and they have got an interesting angle on it, because whenever trade finance is a massive market, it's trillions of dollars, and the way it usually works is people get letters of credit from banks, and that sort of finances you've got this whole process of the shipping process where it's left one custodian and it hasn't got to the other custodian yet. Well, it's left the seller, hasn't got the buyer yet, and someone has to finance that part in the middle. And so these guys are looking at, this is a real world asset market and democratizing that, giving people the opportunity to buy a token that would give a yield, which will represent the interest of actually financing that trade. So that's one angle. There's lots of other angles for it, but it's a regulated market. And I think that the interesting thing for us is every boom or every cycle usually has a driver. So and the drivers of the last cycles were DeFi, decentralized finance, in the Wild West sense, because these were tokens, staking, all sorts of things you could do with it, but it's basically just juggling money between one person and another, and giving ways of people to get yields, but not a huge amount of substance behind it in the early days. It's evolved quite a bit since, but also it gave birth to a lot of what they call centralized finance play, which was sort of got in the guise of DeFi, and that blew up and cost a lot of people a lot of money because they weren't regulated parties. But then the NFTs came along, and that was a little bit sort of bigger at the end of the last boom, and that blew up as well. But I think this time one of the drivers for this crypto boom, once you've got Bitcoin sort of leading the charge, I think from the technology side, the tokenization of real world assets could be a significant driver for this cycle. And the key to it is which we kind of with putting my mature hat on, and as opposed to what crypto guys would look at as their degen hat, which is these are going to be regulated. They are going to be the true use cases of the technology, incorporating the smart contracts, and the parties that will do, I believe, the best in this, and this is what we're looking to tie up with the biggest players, with the people with deep pockets who actually get it and want to do something with it, because they value our experience and our ability and are prepared to pay the right, rate for that. And likewise, once they actually get that, they get what can be done with it, the potential of it, they're ready to roll their sleeves up and go into this market. So I think I hope that's answered your questions. Any further questions, happy to answer them. But I say watch out for real tokenization of real world assets. Exchanges are in a very good place to do this, but exchanges kind of been sitting doing, I'll say very little. They've been sort of keeping the status quo, very worried about their regulation and all the things they need to do to keep the right side of their respective regulators. This is a whole new world that I think, give it a couple of years, is going to start becoming, I think, real.
And when you're talking about tokenization of real world assets, is it NFTs or is it a bit different from that?
Well, NFTs will be a part of that, because the whole point of an NFT is, look, it's a unique digital asset that can be created. Initially, these were very simplistic pieces of art, because that's the first way you could use an NFT and actually demonstrate what it does. So in the early days, these, they found ways to actually make these collectible, and artists, it suited the crypto culture, and these some of them went on to be worth hundreds of thousands, if not millions, but of course the market's matured a bit, maybe it's got a little bit bored, but there's still some that are worth quite a bit. But of course you can have all sorts of things in NFTs. They're non-fungible, means they have to be unique. So think about ticketing. A ticket could be an NFT represented by a ticket. A ticket could be represented by an NFT. And now what you can do with that is you could put a smart contract in there, and you could feed data or information into there. So if you got a ticket for a concert and something happens, something changes, or you could give a little reward into one of them, you could have souvenirs attached to it. So you could feed in, if it's a ticket for a sports event, you could feed in you've got that on your phone in an app, and you go to see a World Cup game and you've got the ticket. That ticket is going to be collectible because it's limited, but you could also feed in the goals, videos of goals that were scored at that game or whatever, and you could then offer various other ways of making those unique NFTs kind of more valuable. Passports could be NFTs, and it's a way of sort of getting the identity side of things, or solving that problem.
So, I mean, would you say it's not too late to get involved then, even now at Bitcoin all-time highs?
I like to think that I worry when people who phone you for the first time and never even thought about it before, and they're chasing it. And I had a cousin of mine said, I'm thinking of putting £50 into Bitcoin. Will I make a fortune? And where do you begin?
Yeah.
Explain all the things you've been through there. I think that if you've got some, it comes with risk, because it could just as easily get hit and drop back down below 60, 50. I don't believe it will be for a long time or extended period. But equally, you've got to be resilient as well in this market, and you've got to know what you're doing. I mean, the whole reason Coinsilium was set up was to leverage our expertise, and I refer to Eddie, our CEO, who has got, is one of the earliest people literally in this space, and one of the most well connected. We just had to wait till the time was right for us to be able to leverage this. Some players have got ahead a lot faster than us. But, I don't think we've been better positioned, because as the market matures, everyone finds their place. And our place, no question, it feels right now, is as the market is maturing, because it's the combination of our skill sets and our ability. And also, we're survivors, and we're pretty much looking at this as the right time. So I wouldn't just sort of decide to buy, jump in with both feet. But there's nothing, there's lots of ways of buying Bitcoin, of buying crypto. But I think I wouldn't spread it around too much. I'd do a lot of research, and I'd look at what are the, coming trends. And, I think a lot of our shareholders, I believe a lot of our shareholders are saying, well, that's my play, we're buying this. And I think these guys, if they know what they're doing, then I'll get a good return.
Yeah, well, I think spreading it around or don't spread it around too much, as you say, is good sort of words, because there are so many projects out there, so many cryptos out there. I mean, you mentioned Ether earlier on as kind of like the running mate, but is that not performing quite as well relative to how it used to, or is it about the same kind of ratio, do you think?
I think there's an arbitrage between Bitcoin and Ether, maybe not as much now as it was. There's also a play with Ether on the basis of expectations of a new ETF.
Okay.
Again, I've got a bet with a colleague of mine that we won't see an Ether ETF this year. I think we'll see one, but I don't think we'll see it this year. He's convinced we will, and I'm prepared to be wrong, because it's going to cost me a very nice dinner. And that was the bet. But I still believe that the SEC is still licking its wounds over the need to actually comply with the court order to introduce the ETFs. They didn't have any stamina to fight that, and they still have got reservations about it. So the idea of actually the next one coming along, I think they're going to try and put that off until they've got a bit more experience in this space. But that doesn't stop people buying it, and it's also got its own kind of dynamic about it. The difference is, of course, Bitcoin doesn't have a management. There's no company there. It is a commodity, a digital commodity in every sense of the word.
Sure.
Ether's got a management structure. They decide. We look at what we refer to as the monetary policy of Bitcoin, and that's set in code. So that there's only ever going to be 21 million. After the 17th of April or thereabouts this year, there's only going to be 450 new Bitcoin produced a day. There's 19.5 million or thereabouts there already. And the monetary policy is set in code that will actually run it till 2145, and then there'll be no more Bitcoin left to actually be mined. And the miners will then rely for their returns or their reward. It won't be in Bitcoin. It will be just a fee for making transactions, for secure networks for transactions.
Network,
But Ethereum's more of a company. It's not as decentralized. It works in a different way, but it's still the most probably out of all the other layer ones, that the most certainly the first mover and the one that is there for other people to compete with.
Okay. CBDCs, Malcolm, we've talked about them, but are they coming?
Well, there's two. I think Nigeria's introduced one, and there's one other, and I can't for the life of me remember what country it was. But they are kind of, there's a lot of pressure on well, it's not pressure. It is really skepticism about the freedom and your liberty, because the ability of governments to trace everything you spend, from a hot dog to, a holiday, if you're using a central bank digital currency, they can monitor you, and people don't like that. Libertarian groups don't like that at all. And I think that when it comes to it, I think a lot of governments are probably afraid to actually introduce them if that's the purpose they're going to serve. I think that there are other ways that they could be used, which could be more in line with kind of realistic and reasonable kind of practices. For instance, if they were just used for activities where regulation was needed, like, for instance, if a company does a fundraise and you needed to have a central bank digital currency to participate, then that is it saves you having to do the KYC and AML process every time. You've got that embedded in the currency.
Sure. Just quickly, Malcolm, we saw during the last iteration of Bitcoin, of course, many other coins were staked, and many smaller coins enjoyed brief success, some a more lasting success. Dogecoin, those sort of entities. What sort of future do you see for those minor? I don't know. Would you call them level 2, level 3?
No, they're not really in the same sense. When I call a layer 1, layer 2, layer 3, that's about the technology. The coins themselves, when you look at them as currencies, don't really necessarily follow directly. I think a layer 1 needs to have it's a foundational layer, so it needs to have adoption to actually make it have any traction and any value. But the interesting thing when you talk about meme coins is they're designed from day one to not do anything. So they're purely speculative. The Doge, as an example, everyone knew from day one it's got no intrinsic utility. It's just a picture of a dog, a Doge, whatever it is. And people like Elon Musk particularly liked it because he's, one of the wealthiest people in the world, and he can do whatever he likes, doesn't need to make sense if he knows that he can get traction from using it. And at one time it was speculated that if there was going to be a currency for Twitter, now X, then Doge is likely to be it. But of course, he's playing around with that, and maybe at some point it could serve the purpose of a currency. But there's no limit to the amount of supply that Doge could have. And whatever it is, it's going to be kind of nominal, and it might go if there's a pump. And that goes up with it because there's more people jumping into that, coin than, and there's not enough sellers, then it'll spike. But there's nothing fundamental driving it, other than fun and interest and whatever it is that sort of this market is pretty full of. I think that the challenge will be for a lot of these layer ones. Solana's doing particularly well. Then there's Polkadot, and there's Cosmos, and there's various others that have got to now, get the adoption up, because they are set off in the initial days of to create solutions that were going to compete with Ethereum as the main mover. And now, their adoption is very much geared to how many developers they can actually get in there and how big they can grow their community. I kind of see challenges there. It's probably a conversation for another time.
Yeah.
Because adoption is something that it costs a lot of money if you're going to do it right, if you don't get in at the right time. A similar kind of pattern happened when I years ago, when I was selling mobile phones in the 80s. And there was a big, hugely competitive between Vodafone and Cellnet. And then you had service providers that were working underneath those networks with each network. And in the early days, Vodafone and Cellnet couldn't sell service themselves directly. There was the licenses were set up, they had to wait 5 years or whatever. But the competition was adoption. And those mobile phone companies, service providers, were paying huge amounts of money to subscribers to join the network, and the dealers were making a lot of money. So you might have a subsidy. At one time, it went up to about £1,000. So they're buying that customer for £1,000, tying him into a year or 2 year contract, which still wasn't enough. And it was a race for growth, because by the time that restriction for the networks to buy to be able to play directly had run out, these service providers had to get themselves to hundreds of thousands of subscribers. But they got involved in that whole process by throwing fortunes. And there was a big very primitive by today's standard, but there was a big boom with mobile phone, in the late 80s, early 90s, and a
But
lot of
phones for you and all of those.
exactly, but that was all about the money was pumped
Yeah.
into it to actually subsidize the adoption. And your phone, you'd see for £99, whatever it is. This is a very different model, but ultimately these, certainly lower ones, all these projects need adoption.
Yeah.
And you're not seeing the amount of money being thrown into it. And even though a lot of them have got sitting on a lot of money, they're more concerned with how long they'll survive than how much they'll actually have to put in to make to drive adoption. So I think that the issue is we still don't know who are going to be the survivors in the long term. I mean, it's I think the market will respond to those that have exude the most confidence, and I think Solana is definitely had a big rise, but it's still a long way off, and a lot of the others still a long way off sort of mass adoption or the adoption that is needed to actually sustain them and to proliferate.
Excellent. Well, thank you both very much. It's a good chat there on all things crypto. I like where I see Bitcoin at the moment. I think it's a very good bellwether for risk, risk on, because it is it is still seen as one of the more speculative plays out there. But I mean, I think this year could be pretty good for it. You've got the halving coming, as you say, and if history is anything to go by, that's always been very bullish for the price of Bitcoin. And it's an election year, so yay! Let's
exactly, yeah. We're from the company perspective, we're really excited. I think we're going to come out with a lot of news because it's all been in the works for a long time, but you can't really do much until the market you can't go out and sunbathe until the sun's out.
Sure, exactly.
I'm going to go out and sunbathe, but we're going to make hay. That's what we're going to do while the sun's shining.
Good.
Yeah.
Well, you've got some funds to get you going as well, Malcolm, as you mentioned earlier in the podcast. I'm looking forward definitely to interviewing you at various points throughout the course of the year, probably doing some more podcasts with you on all things crypto and what you're doing, of course, at Coin. But thank you, and thank you, Alan, for everything today.
Well, thank you both. Good to catch up. Okay.
Thanks, Malcolm. Good to catch up.
Thank you for listening to another podcast from Market Musings. Tune in next time.